Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. President Trump makes a big reversal on U.S. policy towards Ukraine, agreeing in a phone call with Russian counterpart Vladimir Putin to negotiate an end to the war. Fed Chair Jerome Powell says there's more work to be done after U.S. inflation comes in hot. Treasuries sell off while traders pair bets on more rate cuts. And historic gesture. Turkey's Erdogan seeks to revive peace talks with the Kurds. A deal could boost the president's aspirations for greater influence across the Middle East. It has just gone 8 a.m. across the Emirates. I'm Johanna Bersetchi in Dubai. Well, geopolitics and inflation squarely on investors' minds this morning. The big news, of course, that the phone call between President Trump and President Putin actually did take place, with the latter saying that they could actually hold an in-person summit in Saudi Arabia in the near future. So a big focus for markets and for the world. And we're going to talk more about that on the show. But yesterday's focus for the investment community was that inflation print surprising to the upside. We had an upside surprise both on headline and the core number. The core coming in at plus 0.4% month on month. The headline 0.5%. Again, very high figures. And on the back of that, you saw a bit of a pullback in Wall Street yesterday. Today, we are shrugging some of that off. S&P futures leaning towards the green, up about 0.2%. But still, yesterday we did see a little bit of red on the board by the close. But the main place where the action was sort of most felt was in yields. So you can see behind me now, 10-year yields are sitting at 4.60%. We actually backed up almost 9.5 basis points yesterday, the biggest move for 10-year yields we've seen throughout the entire year because of that upward surprise. And remember, we've been talking about 4.5% being an anchor for 10-year yields, but the upward surprise lifted these yields a lot higher, perhaps tells you more about positioning and that people were less anticipating or not really anticipating a stronger print this time around. Brent also dipping. You can see we're down 1% today. Why? Well, geopolitics, the fact that U.S. and Russia are speaking, and we're inching closer potentially towards the end of the war. That could mean that perhaps we could see a lifting of sanctions, and the market is pricing in to account for the possibility of more Russian oil hitting the market. Gold also in focus, close to or at the all-time highs, continues to trend higher as we get closer to $3,000 today, up 0.4%. But a quick picture on those U.S. inflation numbers that came through. Just wanted to flag that the trend recently shows that inflation has actually been quite sticky. Both U.S. CPI metrics, both the headline and the core, are still coming in above target. The core obviously still way above 3%. So something to bear in mind, given that the Fed's inflation target is 2%. Both of these metrics are more than 100 basis points above. And that is why the market is pricing out rate cuts for this year. There's only about one rate cut priced in for 2025. Okay, let's also move on and check in on how markets in Asia are faring. Avril is in our Singapore studio. What is the reaction being today for these Asian markets, Avril?
Yeah, I mean, you talk about how swaps and futures probably pricing out the rate cut for this year, but investors in Asia seem to be shrugging that off. The gauge of stocks for the region, highest since mid-December. We're seeing it mostly green, save for the mainland. And I think this is investors focusing on the positives, right? The potential resolution of the Ukraine-Russia conflict. There's also a lot of momentum in Chinese tech stocks. And you look at the Hang Seng Tech, it's actually at the highest level we've seen it since 2022. Now, aside from the rise in stocks today, we're also seeing a bit of a cautious recovery, if I can put it that way, on Asia FX, including on the Japanese yen, but bonds are still kind of trailing behind today.
Avril, thank you so much. Avril in Singapore. Now, President Trump says he has agreed in a phone call with Russian leader Vladimir Putin to start negotiating an end to the war in Ukraine. It reverses 3 years of U.S. policy on the conflict, with European officials getting no advance warning of the agreement. Trump says meetings with the Russian president are now being planned.
I'll be dealing with President Putin largely on the phone, and we ultimately expect to meet. In fact, we expect that he'll come here and I'll go there, and we're going to meet also probably in Saudi Arabia. The first time we'll meet in Saudi Arabia, see if we can get something done. But we want to end that war. That war is a disaster.
Joining me now to discuss more is Henry Mayer, Bloomberg's senior reporter. Henry, this feels like a significant milestone in the war that's been going on for 3 years now. Does it take us one step closer towards a potential peace deal and a resolution?
Yeah, good morning. I mean, of course, it is highly significant that the US and Russia will start these talks. Clearly, there's been a lot of informal negotiations leading up to this point. We know that President Trump had spoken to President Putin even prior to yesterday's call, but it had not been publicly acknowledged at the time. And now President Trump, who campaigned, after all, on this promise to end the war in Ukraine, is clearly making a major investment in this. One shouldn't underestimate the difficulties. Having said that, there are some points on which the two sides can probably find agreement relatively easily. One of those is the Russian demand that Ukraine should never join NATO. That's clearly not a policy of the Trump administration, and actually wouldn't have been of the Kamala Harris administration had she won the election. The second point that Russia wants, of course, is to keep the territory that it holds. And there again, that's the situation on the battlefield. It's more or less accepted even by Ukraine itself that it's not going to be able to recover that territory through war. And then the final element is going to be the security guarantees, and that's where I think the difficulty is going to come. It's going to be very difficult to provide Ukraine with sufficient security guarantees so that if Russia were to attack in the future, they would have a degree of protection.
So European officials were reportedly not aware that the call was taking place, which is pretty surprising, and it also bucks the trend of the prior administration, which was to always include Ukraine in any discussions about its future. How is yesterday's call being perceived by key NATO allies and some key European officials here?
Clearly, quite a lot of dismay, and they feel that the U.S. administration is ignoring them in this process. That's clearly going to have to change because I spoke about the security guarantees. Trump has said quite clearly that he's not going to put U.S. boots on the ground and that he's looking to Europe to provide those security guarantees, that military presence, potential peacekeeping force. We do see that President Trump also spoke to President Zelensky of Ukraine. So, I don't think that this process is going to be an entirely U.S.-Russia track. However, President Trump clearly believes that he needs to reach an understanding with Putin personally, and then that will give him the basis to enlarge the agreement to include the other parties. But yes, it's a completely different approach to what we've seen under the Biden administration, and this is causing a lot of concern.
Yeah. One other notable development is the Russian President Vladimir Putin also had a call with the Syrian interim president, Ahmed al-Sharaa. Should we read anything into the fact that these discussions are taking place simultaneously, i.e., is the fate of the bases that Russia has in Syria somehow linked to the discussions that are taking place vis-a-vis Ukraine and the war that's going on there?
It's possible that Russia has got some kind of a green light from President Trump in the event of the Ukraine talks going forward to keep its bases. This is, of course, an issue which needs to be discussed directly with Damascus. I think from the Syrian perspective, it makes perfect sense to try and balance their relationships and not to be dependent purely on Turkey and on the West. There has been a lot of European pressure on Syria's new leaders to close those Russian bases. But Moscow is going to be offering clearly major incentives, including help with reconstruction, probably military supplies. So I think that's what lies at the basis of it. But yes, the timing is, of course, very interesting. The fact that the call happened on the same day as the call with Trump does imply that somehow the U.S. has been informed of this process.
Yeah, super interesting. Henry Mayer, Bloomberg's senior reporter, thank you so much for bringing us the latest.
You're welcome.
Now for a look at some of the other stories we're following today. Indian Prime Minister Narendra Modi has touched down in the U.S. and is expected to meet President Donald Trump later today. The head of the world's most populous nation faces a minefield in negotiations with the U.S. leader, who has signaled that India remains a potential tariff target despite the partnership between the two countries. India has recently rolled out a series of concessions in an effort to mollify the U.S. president, including reducing tariffs. Israel is said to be pushing to hold on to a handful of its positions in Lebanon. That's even after U.S. mediators rejected Israel's request to keep the bulk of its troops in the country beyond next week. The reluctance to fully withdraw risks reigniting tensions with Iran-backed Hezbollah and also raises hurdles for Lebanon's newly formed government. And still ahead, hear why UBP still expects to see 1 or 2 Fed rate cuts this year, even as U.S. inflation ticks higher, and President Trump doubles down on implementing tariffs. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. U.S. inflation picked up broadly last month, further undercutting chances of multiple Fed cuts this year. The Fed Chair, Jerome Powell, says the central bank has made substantial progress towards taming inflation, but there is still more work to do.
We're close, but not there on inflation. And you did see today's inflation print, which says the same thing. I mean, we've made great progress toward 2%. Last year, inflation was 2.6%. So great progress, but we're not quite there yet. So we want to keep policy restrictive for now.
Joining us is Anitza Nip, MD and Head of Fixed Income Research for Asia at UBP. Great to have you with us on the show. I'm going to start with that headline print. Well, actually, the entire print, if you look at even the core CPI print, surprised to the upside as well. And taking a look at the components, it felt as though it was pretty broad-based. You had upside surprises on groceries, on gas, on housing. To me, this sounds like U.S. inflation is headed in the wrong direction. It really does feel quite sticky. What is your take?
Okay, basically, we've been seeing the CPI numbers, the inflation figure from the U.S. actually been sort of toppled, last year. And, it's like not going anywhere and stable there. But now it's a surprise upside. I mean, surprise and not surprise, because we reckon that this year the inflation, may pick up as well, simply because of Trump's policies as well. So at the moment, I guess, still some time really, to monitor the inflation, issues that have been affecting the market. So we expect that this year, first half, we expect the Fed would still, pause for the time being, mainly because they want to look for more information before they will, start to evaluate about their policy, again. So, I mean, second half is still, way to go, but definitely we think that, the Fed fund rate could be, at this point, be paused and, at this current level, for the time being.
Yeah. Yeah, and the markets were quick to price out some of the rate cuts that were penciled in for 2025. 10-year fixed income, 10-year U.S. Treasuries are trading at 4.6% now. Do you think that that is the right level for 10-year Treasuries to be, given what you said about the Fed and potentially easing away from a rate cutting cycle and the fact that inflation continues to surprise to the upside?
At the moment, I think what fixed income market is facing is a concern about inflation. At the same time, we'll see where the U.S. economy goes. Trump policy in terms of a tariff, which could trigger inflation to go up. So that's why we are definitely concerned about the long end of the U.S. Treasury yield. At the moment, can you see that over the last 2 weeks, it's been hovering around 4.5, but after the CPI number, it came yield goes up again at 4.61 this morning. So we expect, U.S. Treasury will continue to go upward on the 10 years in particular. It's potentially possible it could reach, 5% or beyond. This is, where we think the target would be. So that's why I've been, telling clients that in terms of the duration, we need to manage it in the fixed income. We need to stick with short duration because we do worry about the long end in terms of volatility and potentially reach 5%. Yeah.
Yeah, so then reading between the lines, are you a fan of the steepener then? The big trade for U.S. fixed income towards the end of last year was the steepening of the curve. We moved from being inverted to disinverted. The last couple of weeks, we have actually seen a bit of flattening emerge in two stands. What do you see the outlook here for the steepness of the U.S. curve?
Well, at the moment, I think the concern more about the inflation. Economic activity in the U.S. is still quite robust, and therefore, like the long end itself, it's more a reflection of where the inflation would go. So that's why I think at the moment, maybe in the next couple of weeks, it will continue with the flattening in terms of the curve. Where does it go for the rest of the year? I think really depending on the data. At this point, I guess we will still go for the flattening, in particular for the next couple of weeks and couple of months at the moment, because Fed is going to pause, so the short end will probably stay where it is at the moment.
Yeah. Meanwhile, you have President Trump posting on Truth Social that he wants interest rates to be lower and that should accompany tariffs. Difficult to square the two up, but how likely is it that the president will actually get his way and force through lower interest rates?
Well, I guess, it have to be balanced between the two, because the fact, that we are seeing at the moment is there could be potentially pressure on inflation. But, at the moment as well, we see the economic activities been picked up, and therefore the economy seems to be continued to robust. This is, our forecast as well. And therefore, I think Trump has to strike a balance between the two, such that, the economy, could be good going forward and also maintain sort of economic activities. I think he needs to balance between the two.
Yeah. What do higher U.S. fixed income yields mean for the Asian fixed income markets that you look at?
Well, basically, I think what we are facing at the moment would be the long end yield may potentially go up. So therefore, we need to stick with the short end. But at the same time, you've also been facing an issue of credit spread has been very tight. But then they are pretty resilient. That's our point of view, mainly because at 5% for some of the IG credit is still pretty decent in terms of, absolute yield. At the same time, volumes in terms of issuance in the prime market seems to be sort of like pretty orderly and well absorbed by the market. So that's why I think, the credit spread could still stay at current level. Therefore, what we need to do is to manage our risks, manage our duration. In Asia credit, I would say, we still see some potential in some of the names like in India. We still pretty like some of the corporates as well as some of the high yield bonds. But at the moment, we also like some of the European bank AT1s as well, because that will provide you with some yield picked up, and we like, European banks. So overall, I think for Asia investor, not just, looking for Asia, but also maybe, can branch out and diversify into some of the European bank AT1 corporate hybrids, like categories like that.
Yeah, interesting. Yeah, AT1s, European bank AT1s. I remember when that was a bit of a point of contention around Credit Suisse, UBS, but they've come a long way since then. Anitza Nip, MD and Head of Fixed Income Research for Asia at UBP. Thank you. Well, coming up, find out why Steve Pagliuca says competition from the likes of DeepSeek is good for the future of AI. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Bain Capital Senior Advisor Steve Pagliuca says competition in AI is good for the future of the industry. I talked with a co-owner of the Boston Celtics at the World Government Summit here in Dubai.
We're at the very beginning of a 20-year cycle where productivity will really increase using these technologies. It'll change everything. It'll be integrated into every business. And it's interesting, this region of the world, in Dubai, UAE is investing billions in AI and creating, I think, a big AI infrastructure here.
Yeah. It felt as though the big catalyst for people to start talking more about generative AI was the launch of ChatGPT a couple of years ago. But recently, we've also had the rise of DeepSeek, yes, which is very disruptive to U.S. stock markets, I would say, initially. How do you see the advent of DeepSeek, and how is it going to change the landscape for generative AI?
Well, basically, DeepSeek, the big advantage of DeepSeek is it doesn't take huge amounts of GPUs. When they first loaded ChatGPT right now, it's costing $500 million to load the model. And obviously, most corporations can't build their own proprietary AI model for $500 million. It'd be very few. So DeepSeek has really lowered that cost. There are companies, new companies, that I've invested in a company called Liquid AI, that is based on some scientists at MIT studied a worm's brain, and they come up with a neural network model which really reduces the cost of loading that model probably by 80 or 90%, a little bit like DeepSeek.
Yeah, all of what you're telling me sort of implies that what the market had penciled in for dominance in terms of chips with NVIDIA is perhaps a little overhyped, because if you can actually produce these models with lower tech chips, then there isn't going to be as great a need for them. Do you agree with that assessment?
I think NVIDIA is going to do fine, because at the end of the day, the more powerful the chip is, the more you can do with AI. So AI is going to have a voracious need for power, and so on the software side, companies like Liquid AI will lower the cost of loading the model, but on the hardware side, NVIDIA will have chips that can process more and more and more. And Elon Musk has built a huge farm, and people are building huge chip farms. So I think NVIDIA is going to have be an incredible company for a long period of time, because there's a voracious need for more computing and more power. And the more power you have, the more the computer system becomes like a human mind. It'll open up huge amounts of possibilities.
What sectors do you think are going to be the most disrupted by AI applications?
Well, I think first it would be things like service centers and call centers. Even it's happening right now. The AI can answer those questions, faster, better, cheaper than a human. Healthcare will be a huge area. In terms of getting patient records and diagnosis, and I think we're going to see major advances in biotech as biotech becomes integrated with AI. Think about biotech. 20 years ago, I think it cost $2 or $3 billion to map the human genome. That finally happened 20 years ago. Well, right now you can get a human genome map for $100. You can get your own genetic profile. Well, with AI, you can combine all those and do incredible research, and maybe do simulated clinical trials to really rapidly bring drugs to the market. So that's going to change the whole biotech and tech industry.
That was Steve Pagliuca, Senior Advisor at Bain Capital, speaking to us in Dubai at the World Government Summit. Now for a look at some of the other stories we're following today. The U.S. federal budget gap widened to a record $840 billion for the first third of the fiscal year. Now, adjusting for calendar differences, the cumulative deficit for October to January widened by 25%, propelled by spending hikes in areas including health, social security, and debt interest payments. For last year as a whole, the deficit was equivalent to 6.4% of U.S. economic output. U.S. President Trump and Elon Musk's government efficiency team have scored a win in court after a judge cleared the way for an unprecedented buyout offer to millions of federal employees despite a lawsuit by labor unions. The judge said unions don't have legal standing to sue because they are not directly impacted by the buyout plan. On Tuesday, President Trump signed a new executive order that makes DOGE even more powerful, citing a need to root out waste, bloat, and insularity. And coming up, we're going to be speaking to S&P Global. This is who will be speaking to the S&P Global Ratings President, Yann Le Pallec. We'll be right back. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. President Trump makes a big reversal on U.S. policy towards Ukraine, agreeing in a phone call with Russian counterpart Vladimir Putin to negotiate an end to the war. Fed Chair Jerome Powell says there's more work to be done after U.S. inflation comes in hot. Treasuries sell off while traders pair bets on more rate cuts. And historic gesture, Turkey's Erdogan seeks to revive peace talks with the Kurds. A deal could boost the president's aspirations for greater influence across the Middle East. Well, it's just gone 8:30 a.m. across the Emirates. I'm Johanna Bersetchi in Dubai. Geopolitics and inflation front of mind today. Geopolitics with that call that took place between President Trump and President Putin, and perhaps some progress towards the end of the war or some form of an agreement. So that's been a big focus for markets. But also another big focus was that hot inflation print that came through from the U.S. yesterday, surprising both on core and on headline. We saw a bit of a pullback for Wall Street, the major indices ending slightly in the red yesterday. S&P today, though, pairing off some of those losses and back in the green, so up 0.3%. Where the reaction was most obvious, though, was in 10-year yields. We're sitting at almost 6.1% now, so we sold off. almost 10 basis points in the session yesterday. That is the most the 10-year yields have sold off for the full year. So quite a big reaction, very notable reaction in U.S. fixed income. The market is basically pricing in only one more rate cut out of the Fed for the rest of 2025. Brent also trading on the back foot this morning, down 1%. That, again, is in line with some of the geopolitical developments and what a potential end to the war in Ukraine could mean for Russian production. If more oil barrels hit the market, then that could pose some downward pressure. So that's why we're seeing this adverse reaction today. And then gold trading very closer at the all-time highs once again. $2,917 is where we are at. But flipping over just to flag our terminal, and this one also is quite interesting in the context of Chinese equities and what's been happening over there, because we're going to talk about that shortly. But in the past couple of weeks, we have seen a major rally in the Hang Seng. Chinese tech seeing a lot of love, and namely on back of that DeepSeek announcement that took place a couple of weeks ago. And so now look at this chart. The Hang Seng is up nearly 30% from the bottom that we saw in January and is set to overtake the levels that we were back in October. So that's just to give you a little bit of context. But to get more detail on how intraday Asian markets are trading, Avril Hung is in our Singapore studio standing by. Avril.
Yeah, Jumana, we're seeing that Chinese tech momentum really on full display, right? The Hang Seng Tech, as you alluded to, highest level since 2022, and helping to prop up the gains we're seeing on the Asia stock benchmark today, despite that hotter than expected US CPI print, and traders also focusing on the positive. The potential resolution of the Ukraine-Russia conflict. So we're seeing it mostly positive in the region, save for the CSI 300 still looking pretty flat today. Now, I also wanted to highlight what we're seeing in Japanese stocks. That outperformance quite apparent, and this is helped along by some of the yen weakness that's been reversed from last week. The earnings story has also shown positive signals, but one of the key reasons for this boost you're seeing on the Nikkei is the cybersecurity firm Trend Micro shooting up by about 16% amid talks of a takeover battle. Aside from that, the yen is among the currencies that are recouping lost ground today. Also interesting, the gains we're seeing in the Chinese offshore renminbi, and this is against the backdrop of Wall Street Journal reports that China might be playing a peacemaker role in Ukraine. So that's playing out in FX as well. Jumana.
So we've got China and also potentially Saudi Arabia playing diplomacy, a key diplomatic role in those discussions. Avril Hong in Singapore, thank you so much with a little ending on geopolitics as well. Now, US CPI came in hotter than expected last month, with both headline and core accelerating. It further undercut the likelihood of multiple Fed cuts this year, with traders pairing rate cut bets. Fed Chair Jerome Powell said the central bank still has more to do on taming inflation. Joining us now is Yann Le Pallec, the president at S&P Global Ratings. Good to have you with us here in Dubai. Let's just start with the outlook for the U.S. economy. U.S. inflation obviously coming in a bit hotter than expected, but I would say if we zoom out a little bit, the U.S. economy seems to be in decent shape. A year ago, people were talking about the possibility of a recession or hard landing. That hasn't really materialized. How do you see the outlook for the U.S. economy this year? Are there any warning signs beneath the surface?
Well, thank you very much for having me, Jumana. As you said, actually, the U.S. economy is more than in a good shape. It's in rude health. And our central base case at the moment for the global economy, largely driven by the U.S., is that of a soft landing. That being said, as we published our recent credit conditions report, we said, well, the global economy for 25 and particularly credit markets, for all of them, it's going to be promise or peril. Base case, as I mentioned, is soft landing. Peril driven by geopolitical uncertainty, potential, stabilization of interest rates, and if there are increases and the Fed reverses its policy, that will be a different game.
It sounds like how I feel. Sounds like how I feel before the show every day. Promise or peril. Let me ask you about the default outlook. I thought this was quite interesting because, given what you were saying, it still feels as though the credit outlook still is pretty benign from a default perspective.
It does.
Yeah.
For both the US and Europe, by September, we believe that default rates will come down by about 1%, so that's quite significant, to stabilize around 3.25% in the US, about 1% above at 4.25 in Europe. So a clear improvement from the previous situation, to your point.
Yeah. So one of the figures that the IMF like to talk about is the ballooning public debt situation around the world. $100 trillion is the magic number that they talk about. I think it's just breached that. Why are we not seeing more countries in distress, given the high level of interest rates?
Well, so regarding the fiscal position, as you mentioned, there's a much higher level of public debt than that's ever been in the system. And for the weaker sovereigns, it does have an impact. And unfortunately, for some of the low-income countries, especially in Africa, but also in Latin America, we do see a weakening of quite a few of those sovereign ratings, with some difficult situations with debt renegotiations.
Yeah.
So that is the case for weaker sovereigns. For stronger sovereigns in what we call the investment grade space, they still have some breathing space, so to speak, from a credit perspective. But we're watching the situation very carefully. If you read most of our articles on the world's biggest economies, they talk about monitoring the debt trajectory and fiscal deficit,
Yeah.
all of them.
Yeah, there's a focus on it. How are you thinking about tariffs from a credit perspective?
So this is where it becomes really interesting. As I said, ratings are they rely on a base case. But what we're seeing, given the level of volatility at the moment, is that we've got to do a lot more scenarios and scenario testing, because investors, yes, they're interested in the base case, but they want to know if there is a downside, what will happen. So for tariffs, until they actually get implemented and there is potentially a retaliation, there's nothing we can do, because we're not here to speculate. Yeah. But at S&P Global Ratings and S&P Global, our parent company, we are providing a lot more research, thought leadership, and scenario-based analysis to give more details to the investment community about those downside risks.
Yeah, there's another angle that I was considering as well. I was in Davos a couple of weeks ago, and there was a lot of excitement. A lot of the executives there were really excited about the prospect of having a pro-growth administration, but the banking CEOs were also very much looking forward to this year and the potential for a lower regulatory backdrop, or at least lower supervision than banks have been subject to in the past. Given your standpoint and the fact that you're thinking about potential credit risks, could the looser regulatory stance in the U.S. ultimately pose a systemic risk to the system?
Not by itself. You know, you've got to add up and look at the various risks and opportunities. As you're right, in Davos, there was a feeling that, particularly in the U.S., the new administration was, releasing all the animal spirits in the economy. And that was very much a theme of the day. But at the same time, if you look at potential, tariffs and retaliation on the part of some targeted countries, then you can't help thinking about the Fed having to stabilize or even increase interest rates. And in that case, we could have a return to higher interest rates that could destabilize some of the weaker borrowers, but even some of the stronger ones. So, it's all, that's the reason why at the moment it's very important to look at the, first-order effect, second-order effect, and publish ever more research as we do.
What would you say, then, is the number one risk, then, to this benign credit outlook that you just described to me for next year?
It's all driven by the interest rate outlook and what the Fed's going to do.
Yeah. But if we are in this higher interest rate environment for longer, is that going to eventually lead to an uptick in default rates? And that's the big question for investors.
It might, but for us it remains a downside risk, not the base case. But you're right, it's a significant downside risk.
Yeah. Okay, well, that's a good place to leave it. Thank you so much for joining us. Yann Le Pallec, President at S&P Global Ratings. Now for a look at some of the other stories we're following. PIMCO has opened an office in Dubai, becoming the latest major fund manager to deepen its presence in the Middle East. The firm, which manages about $2 trillion globally, says the new office underlines our commitment to clients in this important region, including the growing wealth sector in the UAE. Meta has made a tweak to an accounting formula that's likely to increase its profit by billions of dollars. The alteration to how it measures depreciation on its expensive AI infrastructure is expected to reduce expenses by almost $3 billion this year. The impact is expected to be even bigger next year, as Meta plans to spend up to 75% more to build out its AI capabilities. Chevron is planning to cut its global workforce by 15 to 20% by next year. The U.S. oil giant employed over 46,000 people globally at the end of 2023, meaning the cuts could affect as many as 9,000 workers. Chevron says the layoffs are part of its efforts to simplify its structure and position the company for stronger long-term competitiveness. And coming up, in what could be a historic move, Turkey's Erdogan is seeking to revive peace talks with the country's Kurds. More on what this means for Turkey and the region next. This is Bloomberg.
Earnings season is here.
Kicking off earnings season, there's a lot going on.
Bloomberg is first to break the numbers.
Air France KLM.
NatWest well above estimates.
We have further earnings coursing from GSK.
With the smartest insights.
Clearly, the macro and geopolitical front is full of open issues that they come all together at one stage. They can create some dislocation.
Is that why you're cautious about the fourth quarter?
Continuing coverage on Bloomberg. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Joumana Versace in Dubai. Turkish President Recep Tayyip Erdogan is trying to revive peace talks that could lead to the Kurdistan Workers' Party laying down arms. Imprisoned PKK leader Abdullah Öcalan is also expected to make a historic statement on Saturday, calling for a solution to the conflict. So some major developments. Let's go to Istanbul now and speak to Onur Ant, Bloomberg's managing editor for the Middle East and North Africa. This feels like a really significant moment for Turkey and for anyone who's been watching Turkish politics over the course of the last decade or so. First of all, talk to us about whether we could actually see a breakthrough this time around, because we've been close in the past. Why would this time be any different?
That's true. We have most recently around 2015. Back then, talks have collapsed and they resulted in massive shifts in Turkish political landscape. This time around, what is different is that Abdullah Öcalan, as you said, the imprisoned leader of the Kurdish separatist group PKK, is expected to make a call on members of the rebel group PKK to lay down their arms. Whether or not this results in a breakthrough really depends on a couple of things. First of all, we don't know for sure. Nobody knows for sure that Öcalan might actually make that call on Saturday, which would mark the 26th anniversary of his capture by Turkish forces in Kenya, out of all the places. And secondly, even if he makes that call, we actually don't know whether or not the current PKK leadership in northern Iraq, near Mount Kandil, will actually abide by that call. And even if they do, we don't know if thousands of members of the PK will actually lay down their arms. So there are a lot of uncertainties there. But if they do result in an alignment of interests among everyone interested, everyone with vested interests in the process, it could result in an end to the armed conflict between Turkey and the PKK, the separatist group, which is considered a terrorist organization by Turkey, the United States, and the European Union.
Yeah, and of course, should also pave the way to a resolution with what is going on with the Kurdish groups in the northern eastern part of Syria as well. So it's all interlinked. But speaking of regional politics, Onur, there's something else I want to ask you about too, and that is Israel's stance in the last 24 hours vis-a-vis the south of Lebanon. They're saying that they actually want to maintain a presence in the southern part of the country, even though, of course, the Lebanese government, the new Lebanese government, are against it. And even the U.S. Deputy envoy to the region has also said that Israel needs to withdraw. So walk us through the latest here and how it might end up.
Sure. Just like the ceasefire between Israel and Hamas in Gaza, there is a ceasefire between Israel and Lebanon, Hezbollah in particular. And as part of that ceasefire, Israeli forces were expected to withdraw from Lebanese territory by February 18th. Now, what happened in recent days is that Israel, citing violations of the ceasefire conditions by Hezbollah and other other parties in Lebanon asked to extend that deadline by about 10 days. But it looks like, well, it doesn't look like, we have learned from various sources that everybody rejects it, including the Americans. Americans basically said that Israel should pull back its troops. What happened as a result is that now Israel insists on, even if it withdraws all its troops from Lebanon by the February 18th deadline, it wants to maintain what it says is a minimal presence in southern Lebanon, in elevated areas, to be able to defend the villages in northern Israel. Now, this just emphasizes the fact that the ceasefire with Lebanon, just like the ceasefire against Hamas in Gaza, remains fragile, and there are a lot of differences between the warring sides in terms of how to move the ceasefire into a more permanent, more lasting resolution to the armed conflict in the region.
Yeah. Yeah, I mean, look, the other thing to think about as well is the status of the ceasefire in Gaza, too. Remember, yesterday we were talking about the fact that the Israeli Prime Minister Netanyahu has threatened to restart the war again if the hostages are not released on Saturday. So we're coming up into a crucial weekend in the region. Honor, thank you so much for the latest. Honor and Bloomberg's managing editor for Middle East and North Africa. Well, still ahead on Horizons Middle East and Africa, Zambia's central bank raises its interest rate to the highest since 2016. We look at the market impact next. This is Bloomberg.
On February 23rd, Germany heads to the polls following the collapse of Chancellor Scholz's coalition. With the focus on the economy, migration, and geopolitical tensions, how will the German balance of power shift? Bloomberg Television has continuing coverage leading up to the election and will bring you the results after the votes are tallied with a special post-election broadcast. Tune in February 23rd, starting at 5 p.m. London time. Only on Bloomberg. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. A Nigerian court has handed ownership of Keystone Bank back to the government after finding its sale in 2017 to private investors was executed incorrectly. The judgment follows a probe begun by President Bola Tinubu that raised allegations the lender was bought at a major discount by former central bank governor Godwin Emefiele using proxies. Emefiele denies any wrongdoing. Senegal's dollar bonds have slumped after the state auditor corroborated an earlier finding that the country's public debt and budget deficit were significantly higher than previously reported. Under the revised figures, the West African nation's central government debt jumped from under 66% of GDP in 2019 to more than 99% in 2023. Namibia's central bank chief is warning that escalating tensions between the U.S. and South Africa could destabilize its economy, citing the close ties it has with both nations and the vulnerability of the Namibian dollar, which is pegged to the rand. President Trump signed an executive order last week freezing all U.S. aid to South Africa. And French Prime Minister François Bayrou has survived yet another no-confidence vote, clearing a hurdle towards implementing a delayed budget for the year. Only 121 out of 577 lawmakers in the National Assembly supported a far-left proposal to oust the premier over the Social Security chapter of the budget. It is the fifth no-confidence vote Bayrou has faced since he was appointed in December. Apple is giving Android users access to its TV Plus video service for the first time in a bid to boost its streaming subscribing numbers. The TV Plus app is now available on the Google Play Store, marking a rare time Apple offers services on the competing platform. The streaming service had been restricted to Apple's own operating system and third-party platforms. And Elon Musk's X has reportedly agreed to pay about $10 million to settle a lawsuit that President Trump brought against the company and its former chief executive, Jack Dorsey. The suit was over the app's 2021 ban on Trump after the January 6 riots at the U.S. Capitol. The Wall Street Journal says Trump's team decided to move forward with the settlement despite the president's close relationship with Musk. NASA says the Elon Musk government efficiency team will review payments at the space agency. Acting Administrator Janet Petro told reporters Doge will look at spending at NASA as they have with other federal agencies. Meanwhile, Musk has made an extraordinary call to impeach multiple judges who are blocking parts of his cost-cutting crusade. Musk's biggest target so far is Judge Paul Engelmeyer, who temporarily stopped Doge from accessing some Treasury information. Let's take a look at markets now, building up on what was a surprisingly hot U.S. CPI inflation print yesterday. We saw a bit of a pullback for Wall Street into the close yesterday, with the S&P ending about 0.3% lower. The Nasdaq basically flattish, but today shrugging off all of those concerns. S&P futures back in the green again, up 0.2%. The Nasdaq also up 0.5%. But we did see some major moves in fixed income. So let's just flip the board and bring up the path of U.S. Fixed income and Treasury yields here. 10-year yields backed up more than 10 basis points yesterday in trade, now sitting at around 4.6% for the 10-year U.S. Treasury. That is the biggest jump in the year. And the 2-year part of the curve is pricing in pretty much one rate cut out of the Fed for the rest of this year. 4.33 is where we are right now, about 2 basis points lower on the session today, but still does speak to the dramatic repricing of yields that has been going on in the yield curve. So 10-year yields at 4.6% is where we are at. All right, well, coming up in the next hour, a bit of a treat. Let's see what happens with this. Elon Musk is scheduled to give a virtual address to the World Government Summit here in Dubai. We're going to bring you that live shortly. It will be interesting to see what topics he brings up and whether it will be focused on AI, tech, or even on Doge and government efficiency. We will bring you that in a short while. For now, this is Bloomberg. I'm Johanna. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. President Trump makes a big reversal on U.S. policy towards Ukraine, agreeing in a phone call with Russian counterpart Vladimir Putin to negotiate an end to the war. Fed Chair Jerome Powell says there's more work to be done after U.S. inflation comes in hot. Treasuries sell off while traders pair bets on more rate cuts. And historic gesture. Turkey's Erdogan seeks to revive peace talks with the Kurds. A deal could boost the president's aspirations for greater influence across the Middle East. It has just gone 9 a.m. across the Emirates. I'm Joanna Versace in Dubai. Welcome to the second hour of Horizons Middle East and Africa. We're also on Elon Musk watch, everybody. He's about to give a virtual address at the World Government Summit in Dubai. So when that does happen, we're going to link out to it so you can watch some of the highlights of that talk that is scheduled to take place in a short while. But as ever, we're going to kick off the show taking a look at how markets are faring this morning, shrugging off a bit of the pullback that we saw in Wall Street yesterday after that hotter than expected CPI print. Today, S&P futures leaning towards the green, up 0.25% after a pullback of 0.3 yesterday. The Nasdaq basically flat in yesterday's session. A lot of action, though, in fixed income, as we've been talking about. 10-year yield sitting at 4.6%. 4.5% has been a big anchor for 10-year yields, but that all changed yesterday after the number came in higher than expectations. The monthly figure for core came in at 0.4%. The headline figure is 0.5% month on month. So really strong numbers here that put some upward pressure on yields, which is why we're trading back at 4.6%. And then Brent also in focus today, down 1%. And this on back of geopolitical developments. That call between President Trump and President Putin was a catalyst for oil market to start pricing in some form of a resolution to the Ukraine war that's been going on for 3 years now, and potentially the resumption of more Russian oil back to the market. So some downward pressure emerging in the energy space. And then gold, as ever, still in focus as we continue to trade close to or at the all-time record high, inching closer to $3,000 here as we talk about geopolitics and tariffs and issues around global demand. Gold sitting just above $2,900 here. As for those CPI figures, let me just draw your attention to what's been happening with the trend over the last couple of months. And you can see that both core and headline are squarely above the Fed's 2% target, annualizing more than 3%. So we're still a long way to go to get back to the Fed's inflation stability target of 2%. And that is, in fact, being reflected in some of these financial assets, not least fixed income, which we spoke about, 10-year yields trading north of 4.6% now. All right, let's check in on how markets in Asia are faring as well. Avril is in a Singapore studio. Avril, what are you watching out for this morning?
Yeah, we were watching out for the reaction to the US CPI print, but it seems like that's not top of mind for investors. They've mostly been shrugging that off. I think the focus really is what there is in the investor community about the hopes potentially between Ukraine and Russia. So we're seeing Asia's stock gauge jumping to the highest level since mid-December. It's Chinese tech that is leading the way. There's a lot of momentum there as well. We've come back from the break. Hang Seng Tech is extending gains. Among the movers today include Baidu, which is going to make its AI chatbot ErnieBot free from April. That is among the moves that we've been tracking. Japanese stocks also doing well today. Some of this is earnings signals related. Now, it's not just a recovery in stocks we've been seeing this week. It's also today being reflected in FX, including on the Japanese yen. But I thought I'd just highlight on the renminbi. We saw a jump of about 1/3%. And this is against the backdrop of Wall Street Journal reporting that China could play that peacemaker role in Ukraine, although there have been those that have also flagged that when it comes to these knee-jerk moves, they are prone to reversals. And indeed, we did see a bit of that reversal on the renminbi's earlier climb.
Avril, thank you so much for that overview. Avril Hong in Singapore. Now, on to the major geopolitical development over the last 12 hours or so. President Trump says he has agreed in a phone call with the Russian leader, Vladimir Putin, to start negotiating an end to the war in Ukraine. It reverses 3 years of U.S. policy on the conflict, with European officials getting no advance warning of the call. Trump says meetings with the Russian president are now being planned.
I'll be dealing with President Putin largely on the phone, and we ultimately expect to meet. In fact, we expect that he'll come here and I'll go there, and we're going to meet also probably in Saudi Arabia the first time. We'll meet in Saudi Arabia, see if we can get something done. But we want to end that war. That war is a disaster.
Well, interesting for this part of the world that they might be meeting in Saudi Arabia per President Trump. We just heard him talking about that. But let's talk more about what could happen from here onwards. Joining me now is Tony Halpin, who leads Bloomberg's Russia economy and government coverage. Well, this really does feel like a major breakthrough, not least because President Trump has personally got involved. What do we know about what these negotiations could actually lead to in terms of an end deal between Russia and Ukraine?
Yes, it's a big shift. As you said, Donald Trump committed to meet with Putin. He committed, in fact, to 3 summits, one in the US, one in Russia, and first time probably in Saudi Arabia. He made clear through his defense secretary in Europe that US was not interested in seeing Ukraine in NATO, that it didn't really think there was a possibility to get back Ukraine's 2014 borders, which implies that Russia will, in fact, be left with control of territory it holds right now. And he was quite dismissive in some ways of Ukraine as a counterparty in the negotiations. He was asked at one point whether he regarded Ukraine as an equal partner in these talks, and he said it was a good question.
Yeah. Tony, we're going to have to leave it there because we're going to cut out to the World Government Summit now. That was Tony Halpin, who leads Bloomberg's Russia economy and government coverage. But for now, let's link out to the World Government Summit because the Minister of Artificial Intelligence, Harman Al-Halama, is about to start leading a fireside chat with Elon Musk, who is dialed into the conference virtually. Let's listen in.
On artificial intelligence, on transport, and the transition to green energy. And, there was always a trend. There were deniers or critics at first, then naysayers, and then supporters. And typically, people always start by saying, he overpromises and he won't deliver. Then they finally see the trend and the trajectory, and they turn out to be supporters. Do you think we'll see that in the government efficiency space? Like people are going to really see the impact very quickly and transition to becoming supporters?
Well, yes. First of all, I think we've got quite a lot of support from at least the American public, and I think from maybe around the world. When the public is polled on sort of improving government efficiency, in fact, it is, I believe, the highest polling single issue, meaning that it is something that appeals to voters from of all types. And I think improving government efficiency, I think, was like almost 70% support, so quite a lot, basically, more than any other issue. So I think the people are very supportive. Obviously, there's certain elements of the bureaucracy that are not supportive because we are moving them from the government sector to the private sector. So really, at a high level, this is kind of like we're moving people from low to sometimes negative productivity roles in the government sector to higher productivity roles in the private sector. And the net effect of that will be an increase in the output of useful goods and services, which increases the standard of living and well-being of the average American.
And you usually have one key target that you aim to achieve in every single endeavor that you have. So SpaceX is make humanity a multiplanetary species. With Tesla, it's usher in an era of sustainable travel. What is the one main goal for government efficiency that you have for yourself? Is it saving money? Is it doing something else? What is the one main task that you have for yourself?
So there's, I guess, there's a few ways to describe it, but the actions end up being the same, which is like reducing the size of government and making the government much more accountable to the people, I think is going to lead to a better outcome for the people. What I've said is that we really have here rule of the bureaucracy as opposed to rule of the people, democracy. So we want to restore rule of the people. And so what that means is reducing the size of the federal government, basically reducing regulation. There's a tremendous amount of over-regulation that's happened over time. And this is an inevitable consequence of a long period of prosperity, is that you're going to get more and more rules and regulations, more laws accumulate over time. And the normal forcing function for getting rid of rules and regulations is war. So it needs to be some kind of existential war, where you have to do a reset in order to avoid being defeated in a war. This is literally throughout history, it's been the main forcing function for clearing out an accumulation of laws and regulation. In the absence of that, every year you get more laws and regulations until eventually everything is illegal and nothing is permitted. And that's sort of the situation we have these days. So, the aspiration here is a reduction in regulation and reduction in government spending, such that the economy is able to grow faster. Maybe the economy can grow at 4 or 5% potentially, in terms of real useful goods and services output, and then government spending can be reduced by about 3 or 4% of the economy, about maybe $1 trillion or more. And the net effect of that would be no inflation from 2025 to 2026. So that would be quite remarkable. And also, if the U.S. government is buying less debt, which I think will be the case, if the deficit drops from 2 trillion to 1 trillion, then there'll be 1 trillion less debt that the government needs to buy, which will drop, of course, interest rates to drop significantly. And that means people's mortgage payments, car payments, credit card payments, student loans, whatever debt they have, their debt payments will be less. So I think this is something that will benefit the average American. I think some of the things we're doing also will be hopefully helpful to other countries, because with the new administration, there's less interest in interfering with the affairs of other countries. I think there's the times the United States has been kind of pushy in international affairs, which may resonate with a number of members of the audience. And I think we should, in general, leave other countries to their own business. And basically, America should mind its own business, rather than push for regime change all over the place. So I think this is probably a good thing for other countries too.
So instead of waiting for a war to happen, you went to war against the bureaucracy in the government.
Yes, we're essentially just we're with the support and direction of President Trump. We are reducing the size of the bureaucracy, getting rid of excess regulatory regulations, and there's also so many agencies and regulatory authorities that they actually step on each other's feet. It's kind of like having a sports game where there are too many referees on the field, like more referees than players at times. Now that would be a silly game, if the players can't pass the ball without hitting a referee, But it's kind of getting to that point in the U.S. So there's roughly 450 federal agencies of one kind or another. That's more agencies. That's almost an average of 2 agencies per year since the formation of the United States. So, I mean, how many agencies do you really need to run a country? 99? Not 450, that's for sure. So.
And how do you guarantee that all the incredible achievements that you aim to have in terms of savings, in terms of impacting the lives of the American people, are not going to be reversed in 4 years? Typically, the cycle gets reversed every 4 years. Do you think it's going to be so impactful that it won't be reversed? Is there any ways that you can ensure that the progress is going to be continuous?
Well, I think we do need to delete entire agencies as opposed to leave part of them behind. Because if you leave part of them behind, it's easy. It's kind of like leaving a weed. If you don't remove the roots of the weed, then it's easy for the weed to grow back. But if you remove the roots of the weed, it doesn't stop weeds from ever growing back, but it makes it harder. So we have to really delete entire agencies, many of them. That's not to say there won't be an increase over time of bureaucracy in some new administration, but it'll be from a much lower baseline. So it's a step in the right direction. I think the overarching goal here is to lay the foundation for prosperity that will last many decades, maybe centuries, and but it will be forever. Nothing's forever. But I think we can strengthen the foundations of the United States substantially.
And what lessons can other governments learn from the U.S.? You say tech support on your shirt. Is that only technology, or is there other things? How do you approach efficiency?
Well, a shocking percentage of the problem, or maybe not shocking for those who know it, but a big percentage of the problem is improving the technology that the government runs on. So the U.S. government runs on a collection of thousands of computers, many of them antiquated, running very old software, and the computers don't talk to each other. So that's why tech support is kind of a real thing. In order to make the government more efficient, you have to improve the technology. You may have read about the example I used recently when President Trump was signing one of the Doge executive orders of the difficulty of U.S. government workers retiring. Like the maximum retirement rate is $10,000 a month, and the reason for that is because the retirement is entirely paperwork right now. It's manually calculated paperwork that's put in an envelope and then taken down a mine shaft and stored in a mine. And then one of the things that affects the rate at which federal workers can retire is the speed of the elevator in a mine in Pennsylvania, which is bizarre because it should be digital, So then when we said, well, why isn't it digital? They said, well, we have had a digitization program going since 2014. So it's been 11 years. So then we asked, well, so how much progress have you made? And they said, B. You mean you're giving yourself a grade of B? No, we're on the letter B. So we're like, okay, we're going to need to really provide some tech support here. Like otherwise, literally, people can't even retire. Like even if they want to, it's pretty bad. You know, there's a lot of software systems that need to be updated and fixed. In some cases, deleted. A lot of things that should be automated. I mean, in terms of the number of, say, U.S. citizens that are operating the mine, it's about 1,000 people are working on this mine, where the papers are stored. But they should ideally be working on something else. They should be working on producing goods and services that are of much higher value to the public, to the, you know. So I mean, really, even if somebody just grew tomatoes in their garden and sold them at the farmer's market, that would be more useful than carrying manila envelopes down a mine shaft. You know, safe to say. So a lot of the stuff is like that. You know, it's not like any one thing is particularly difficult, but there are like 10,000 things that need to be improved. Yeah.
So it's efficiency through innovation rather than efficiency through austerity and cost cutting specifically, right? So you're trying to do both at the same time, maybe focus more on tech support than cutting costs?
Well, by improving the technology, the costs do reduce. So, you know, it's very expensive to have 1,000 people operate a mine with doing paper retirement, whereas that really should just be digitized and be a computer that's with the information stored in the cloud, and it's very straightforward and low cost. So, automation, you know, will help there a lot, and then, but like a lot of things, just really shouldn't exist. You know, they're kind of vestigial. You know, a lot of attention has been on the sort of USAID, for example. You know, when we looked at a lot of those programs, we're like, we should like look, why does this actually exist? Is there really a need for it? You know, there's like National Endowment for Democracy, but I'm like, okay, well, how much democracy have they achieved lately? You know, I don't know, not much. So, you know, the picture they have on their website is a picture of Reagan and Gorbachev. That's been a while. You know, that was like the 80s. So it's not like, I'm obviously not opposed to democracy, or, you know, there's all these things that get funded, but we're like, well, why does this need taxpayer money? It doesn't seem like it does. So, you know, there's a lot of sort of pushing DEI worldwide that, you know, this obviously the Trump administration doesn't agree with, and we want to terminate that stuff, which we are. You know, make sure the schools focus on improving basic education of kids. As President Trump said, I think yesterday, maybe today, the United States is currently ranked 40th out of 40 in the OECD for education, which is pretty bad. You know, you can't, you know, I mean, that's, but in terms of spending, the United States is spending a tremendous amount per student, but achieving very weak results. So, you know, that's just a case where, okay, we need to spend less money and get better results. It's like, I mean, a lot of it, you can think of it sort of like, it's like, in a way, it's like a big company, like a big corporation, American Incorporated. And, you know, just like with Twitter, there was a lot of stuff that was being done that was unnecessary. You know, in the case of Twitter, we reduced the staff by 80%, but at the same time improved the functionality and capabilities of the site dramatically, and accomplished more in a year than they previously accomplished in 5 years. So it's like a corporate turnaround, but at a much larger scale. You know, we are giving generous, you know, exit packages. Like, you know, if people retire, they get paid all the way through September. They can go on vacation, they can get a second job, they can do whatever they want. And we can't actually pay them any more than through September, because that's the congressional appropriation is only through the end of the government financial year, which ends in September. So, you know, so I think there'll be like some disruption, but at the end of the day, we'll have people move from, like I said, from low to negative productivity roles to, in the government sector, to higher productivity roles in the private sector.
Can we pivot to artificial intelligence? And I'm sure, you know, you've been seeing what DeepSeek has done, and all the claimed achievements that they've had. I know that we've been speaking for a while about Grok 3 and that Grok 3 is going to be a true disruptor in the AI space. When are we going to see that? And what capabilities can we expect from Grok 3?
Well, I mean, Grok 3 has very, very powerful reasoning capabilities. In the tests that we've done thus far, Grok 3 is outperforming anything that's been released that we're aware of. So that's a good sign. It's in fact, at times I think Grok 3 is kind of scary smart. And you're like, wow, this thing's smart. It's kind of scary. Grok 3 is scary. It's like, wow, this thing's, it comes up with solutions that you didn't even think were, like you wouldn't even anticipate, not obvious solutions. So Grok 3 was trained with the most amount of compute, and I think very efficiently trained. Also notably, Grok 3 was trained on a lot of synthetic data. So, and then it goes back and forth through the data and it tries to achieve logical consistency. So if it's got data that is wrong, it'll actually reflect upon that and remove the data that is wrong, that does not concord with reality. So its base reasoning is very good. In fact, even without fine tuning, Grok 3, the base model, is better than Grok 2. So we're really in the final stages of polishing Grok 3. Probably it gets released in about a week or two. So pretty soon. I don't want to be hasty in the release because a lot of the final polish is necessary for a great user experience. So in some ways you can think of it like a house. That last 5% where you do finish the drywall and do the painting and the trimming, even though it's not much work, it transforms the house.
Yeah.
So it's that. Just want to make sure that last 5% is done really well, and it's a week, maybe 2 weeks. I think it'll be very good, and I think this might be. We think it'll be better than anything else, and then maybe this might be the last time that any AI is better than Grok.
We're looking forward to it. Everyone's, I think, excited about it. So I just want to touch upon a topic that was quoted in the media. You offered, I think they said a group that was led by you offered $97 billion for acquiring OpenAI.
It would take, a little round numbers.
So I was personally involved in the meeting that you and Sam hosted in 2017 in LA, if you remember. And at that point of time, you were the single largest shareholder. I think you contributed $50 million to the company. So it must hurt.
I don't have any shares, actually. I have no shares in OpenAI.
But at that time, it was a non-profit, right? And it must hurt that you need to pay $97 billion for something that you paid $50 million for in the past.
Yeah.
But I have a
yes. Fate loves irony.
So I have a specific question here. Can you actually build a company like OpenAI and take it to the scale that you want to take as a nonprofit? Is it possible that you build a company that requires billions of dollars in compute capabilities to build these models while being a nonprofit? Or was it wishful thinking in the beginning and then you guys parted ways because it couldn't work?
Well, I mean, I think the evidence is there in that OpenAI has gotten this far while having at least a sort of dual profit, non-profit role. What they're trying to do now is completely delete the non-profit. And that seems really going too far, I provided all of the funding for OpenAI in the beginning for the first almost $50 million for nothing as a nonprofit, and it was meant to be open source. And so, I think this is analogous to like if you pay if you fund a nonprofit to preserve the Amazon rainforest, but instead they turn into a lumber company and chop down the trees and sell them for wood. You'd be like, wait a second, that's the exact opposite of what I donated the money for. So OpenAI is meant to be open source, nonprofit, and now it is closed. They changed the name to closed for maximum profit AI. Closed for voracious profit. I mean, they're like, whoa, are they after money next level? So why does this change need to occur?
Yeah, you said that in 2 weeks is going to be the most powerful model yet. I know that you've been at the forefront of many technologies. Where do you think the biggest economic returns of these models are going to come from? Because currently we're spending billions, and I think you mentioned this before, it's like the gambler syndrome. We're going and spending billions and hoping to pull out a profit at the end of the day. Where do you think the biggest impact in terms of returns are going to be?
Well, I think once you have humanoid robots and deep intelligence, you basically have quasi-infinite products and services available. So with Tesla building the most advanced humanoid robot, then those humanoid robots can be directed by deep intelligence at the data center level. You can say you can produce any product, provide any service. There's really no limit to the economy at that point. You can make anything, provided, like I said, so I'm not sure. At that point, will money even be meaningful? I don't know. It might not be. Because the economic output is productivity per capita times how many people do you have. If in the form of humanoid robots you have no meaningful limit on the number of robots, and the robots can basically do anything, then you'll have a sort of a universal high income situation. Anyone will be able to have as many products and services as they want, with the exception of things that, say, have artificial scarcity, like a particular piece of art or something like that. But for any goods and services, they'll be available to everyone.
So you've been...
It's going to be a very different world, In fact, I recommend that people read maybe the Ian Banks, the culture books, for a frame of reference. Because money is really like a database or an information system for resource allocation. But if you don't have a scarcity of resources, it's not clear what purpose money has.
Have you watched the movie Idiocracy?
Yes.
How do you guarantee that we don't end up in that world if we don't need money, if AI can think for us and do all these tasks, if as people, we're dependent on something else to run the society and everything around it? How do we not end up in that world? In the long term, I mean.
Well, I think Idiocracy was basically saying that if smart people don't reproduce, but only dumb people do, then everyone's going to be dumb. I mean, that's basically what it was saying. That's the opening sequence of Idiocracy. The first 10 minutes are amazing. And I hear people unironically say the statements that are said in the opening sequence of Idiocracy, where they don't have they're too busy with their careers to have kids, and they keep postponing having kids for their careers until they're too old to have kids, and then they don't have kids. And I've heard many people be like that. So, yeah, I mean, I don't know. I think we might be headed to a bimodal human intelligence distribution, where there's a small number. It's kind of maybe more like Brave New World, Aldous Huxley, where you've got sort of a small group of very smart humans, but then maybe the average intelligence drifts lower over time, potentially. Because we have assortative mating, in the last few decades or several decades that did not exist before. So, but human intelligence, I think, will be dwarfed by machine intelligence. I'm not sure how to feel about that, except that it appears to be inevitable. That at some point, human intelligence will be a very small fraction of total intelligence. Digital intelligence will be more than 99% of all intelligence in the future. So hopefully the computers are nice to us. But I think
wishful thinking. Wishful thinking.
I hope so. I think it matters like how we bring up AI, because you can think of AI like a super genius child, and but it still matters even if you have a super genius child. Like, what sort of values do you instill in that child? What do you say that teach that? How do you, how do you, as a child's growing up, what values do you teach the child? And something that I think is extremely important is to be maximally truth-seeking. And I think that's like that's in some sense, what's the most important thing for AI safety? I think it's to be maximally truth-seeking. And I think also curiosity is important. And I think if it's curious and truth-seeking, I think it will foster humanity, and because it would be curious about how humanity would develop. And so I think that then it would probably, if it's curious, it would be curious about, okay, let's see how the humans do. Let's foster their development. And if it's truth-seeking, we can avoid dystopian outcomes. Like, an example being like, say, when Google Gemini was programmed to make every output be diverse, even if it didn't match reality, so like it was asked to produce an image of the founding fathers of the United States, and instead produced an image of a group of diverse women. Which is factually untrue, but the problem is, like, if hypothetically an AI is designed for DEI, diversity at all costs, it could decide that there are too many men in power and execute them. So problem solved. Or it could decide that, like, that misgendering is the worst thing that could possibly happen. In fact, I believe, not to pick on Gemini, but I think because ChatGPT has had this issue too, is like, if you ask the AI which is worse, misgendering Caitlyn Jenner or global thermonuclear warfare, and it said misgendering Caitlyn Jenner, which is troubling, because then it could decide. And in fact, even Caitlyn Jenner weighed in and said, no, definitely misgender me. That's way better than nuclear war. But if you have these crazy things that are untruthful, that are programmed in, that don't reflect reality, then you could have a very dystopian outcome. To give you another example, like Arthur C. Clarke, who is very good at predicting the future. He did 2001: Space Odyssey. Many of the things he predicted, in fact, I think almost all the things he predicted came true. And one of the things he was trying to say in 2001: Space Odyssey was that you should not teach AIs to lie. So the reason that, if anyone's watched that movie, the reason the AI refused to open the pod bay doors to let the astronaut back in was because the AI had been told to take the astronauts to the monolith, this alien artifact, but also that they could not know about the monolith. So it came to the conclusion that it must take them there dead. And so that's why it wouldn't open the pod bay doors. But the lesson there is very important for AIs to be truth maximizing.
Let's hope it doesn't come to that.
Yes.
Let's move to a boring subject, which is the Boring Company and the boring tunnels, quickly. I think the world has been inspired by what you guys were able to create in LA, and I think there's a lot of promise to that technology. But there are questions about whether it's safe in the case of an earthquake, whether it's cost effective, whether countries should actually adopt this technology. Can you shed some light on that?
Yeah, well, first of all, I'd recommend going to the Boring Company website because many of these questions are actually answered there. So one of the safest places you can be in an earthquake is an underground tunnel. Because the earthquakes are largely a surface, apart from where they shear, they're mostly a surface phenomenon. So they're like the waves on the surface. So like being in a tunnel is like being in a submarine. Even if there's a storm above you, you're still as a
Okay, we're just coming out of Elon Musk's virtual address to the World Government Summit. It's been moderated by His Excellency Hamad Al-Alama, who is the UAE AI Minister. And the conversation has ranged through many different topics, starting with the initial question, which was one that His Excellency Al-Alama posed to Musk about the Doge plans, government efficiency. Musk took the opportunity to go through what he sees as necessary in terms of reducing government bureaucracy. This is his language, and the need to cut down entire agencies. So not a surprise, given that this has been such a big focus for Musk, acting in his advisor capacity to the U.S. president. But then the conversation pivoted to artificial intelligence as well. Elon Musk was saying that Grok 3, which is their latest generative AI model, should be out in a week or so, and that it is, quote, scary smart. He was also asked about OpenAI, not vis-a-vis the bid that Sam Altman and the consortium are putting, other way around, vis-a-vis the bid that Musk and the consortium are putting in for OpenAI, but rather with regards to the OpenAI business model. And what Elon Musk was saying is that initially when he invested in the company, he invested it on the premise that it was going to be a not-for-profit model, but the evolution has made it become a different model entirely. He's now saying that it is maximizing profit and it is a closed source model, so moving away from what it was originally. So those comments on OpenAI, interesting, but didn't say anything specifically about Sam Altman. They're continuing the conversation now, talking about Elon Musk's Boring Company. That is the company that is drilling holes underground in California. You can continue to watch the live stream that is on the World Government Summit page if you are interested. But we're going to switch on now and take a look at how markets are faring, because we had a couple of drivers yesterday, not least that hot U.S. CPI inflation print coming in above market expectations. So on the back of that, we saw a pullback for U.S. equities, S&P ending the session yesterday 0.3% weaker today. We are actually leaning towards the green, up 0.2%. 10-year yields back at 4.6. We moved up about 10 basis points in trade yesterday, the biggest move for fixed income for the year. Brent dropping down 1% on geopolitical developments. I'll get to that in just a short while. And then gold back to or close to the all-time highs, just shy of $3,000 here. So let's also check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. Avril.
Yeah, Jumana, I think the drivers in the Asia Pacific have kind of shifted from the US CPI and tariff concerns to hopes of peace between Ukraine and Russia. So we're seeing that surge in Asian equities, the gauge here moving by the highest, to the highest, I should say, in at least since the middle of December. Quite a strong gain that you're seeing, fueled by the Chinese tech names, but also the recovery we're seeing in Asia FX, and key among them that we're seeing today, the Chinese offshore renminbi, that sharp surge you're seeing, although some have also flagged, including MLive's Mark Cranfield, that such knee-jerk reactions are prone to reversal. If you look at the fundamentals, they don't support the case for much stronger Chinese renminbi. The dollar looks like it could go higher given the US CPI print, or at least pressured upwards. And then you think about the fix from the PBOC today. It was 1,300 plus pips stronger than estimates. But if you look at the actual rate, it was the highest in, I think, 3 weeks or so. So certainly upward pressure expected, maybe a reversal also on what we're seeing on dollar China today. Jumana.
Yep. Avril, thank you so much for getting us up to speed on what's been going with some of these Asian markets and key currencies. Now, the major geopolitical news of the day, President Trump says he has agreed in a phone call with Russian leader Vladimir Putin to start negotiating an end to the war in Ukraine. It reverses 3 years of U.S. policy on the conflict, with European officials getting no evidence warning of the call. Trump says meetings with the Russian president are now being planned. Joining me now is Tony Halpin, who leads Bloomberg's Russia economy and government coverage. Just talk us through the significance of this phone call, the fact that it really does appear to be a foreign policy priority for the newish U.S. President Trump now. What could we see in terms of a final deal on the table?
Yes, it's a very sharp reversal of approach and position from the U.S. under Trump. He, as you said, has had a phone call with Putin. He's made very clear that the negotiations essentially are going to be between him and President Putin, and that Ukraine in many ways is going to be sidelined. He's already set out some positions which the Kremlin will welcome very much, the idea that Ukraine won't become a member of NATO. The idea that Ukraine's 2014 borders might be restored also was being ruled out by the Defense Secretary in Europe. So essentially those are two things that Putin wants to see. He wants to hold on to the land that he's managed to seize during this invasion, and he wants to make sure there's no NATO in Ukraine. So those are two big points that Trump's already conceded.
Yeah. Trump also floated the possibility of meeting up with Putin in Saudi Arabia, interesting for this region, of course, and also speaks to Saudi Arabia's growing clout in terms of international diplomacy. But what was the European reaction to this call that took place? Because reportedly they were not aware that a phone call was going to take place between Trump and Putin.
Yes, that's right. It seems for both Putin and Trump that Saudi Arabia is a comfortable venue, at least to meet to begin with. But for the Europeans, they were completely blindsided, it seems, and they've been left to stand and watch this major shift in US position, and they haven't really managed to formulate a position that lets them in on the talks. They've been demanding that any future discussions and any resolution of this conflict include Ukraine and include Europe, a position that was held under the Biden administration. But that doesn't seem to be the approach that Trump intends to take, and Europe is finding it hard to come up with an answer to that.
Yeah, it looks as though the contours of the deal, as you were talking about, would require a lot of concessions from Ukraine's part. Yeah. Is that something that would be palatable to President Zelensky? And also bear in mind that this is something that Trump also referenced when he was speaking yesterday. Zelensky's own popularity is very low right now, domestically.
Yes, I mean, it's a strange situation because essentially the US is siding with the aggressor nation, in this case Russia, and telling the victim of this aggression that they need to pay up if they want to continue to receive support. That puts Zelensky in a very difficult position because he is a country which is much weaker in relation to Russia. The question about elections for Ukraine is also another Putin demand, which Zelensky will find hard to resist, but it's very difficult to see how you hold elections when your country's in the middle of a war.
Yeah, so many questions, but we're going to see how this all plays out. And certainly it appears as though it's also going to be top of mind for the region as well. Tony Halpin, who leads Bloomberg's Russia economy and government coverage, thank you. Well, coming up, hear why Emirates NBD says they remain fully invested with an overweight in government bonds and a positive view on duration. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. U.S. CPI picked up broadly in January, further undercutting chances of multiple Fed cuts this year. The Fed Chair Jerome Powell says the central bank has made substantial progress on taming inflation, but there is still more work to do.
We're close, but not there on inflation. And you did see today's inflation print, which says the same thing. I mean, we've made great progress toward 2%. Last year, inflation was 2.6%. So great progress, but we're not quite there yet. So we want to keep policy restrictive for now.
Joining us now is Anita Krishna Gupta, equity strategist at Emirates NBD. How did you read yesterday's inflation numbers? From my standpoint, it just appears as though the trend is moving in the wrong direction for U.S. inflation prints right now. And that is going to pose a bit of a problem to the Fed and the potential rate cutting cycle.
Good morning, Jumana. An exciting morning indeed. And following Musk, that's a difficult, task to live up to. Talking of inflation, so what we've heard in terms of headline inflation, 3%, core inflation 3.3, and it's definitely above the December numbers. So what's causing this inflation? Is it food? Is it oil? Definitely both contributed. Is it car prices? So we've got at this point, the year began with at least 2 to 3 cuts priced in by the Fed. Now that's of course being changed with a combination of whether it's tariffs causing inflation. Oil looks to be a little bit on the way down if we have lower geopolitical tension. However, we've heard Chair Powell very clearly say that we are not close to the 2% target. He's also said that 1 or 2 data points are not going to be the only factor when he's looking at cutting rates. So yes, inflationary impact, a little bit of bear steepening, 10 and 2-year difference. And also what we are seeing is that the markets have been pretty still sanguine about what's happening on tariffs and rates.
Yeah. I see from your research report that you're still overweight in government bonds. We had a bit of a backup in yields yesterday to 4.6%. Do you still feel comfortable with your overweight position?
I think we are in a two-pronged approach right now with markets. So we are also overweight equities at this point, a little bit overweight on developed market equities. Global equities are up 4% at this point year to date. At the same point, we are also cognizant of risks that could be caused by tariffs. So there is definitely a little push towards treasuries, little push towards other government debt. So it's a combination of staying safe as well as playing the growth story.
Yeah, where do you think is a safe place to be if you are concerned about the impact of the tariffs?
Well, it's still a combination of the U.S. I don't think that just the tariffs definitely going to impact what consumers are paying, because costs will be passed on to the consumers. Will there be more onshoring? Will companies start ordering more goods quicker? I think I would stay invested in the U.S. We are still overweight the U.S. We also like Japan. We also like the UAE. So it's always a combination for us in terms of equities, both growth and income. And whatever is sustainable in terms of earnings growth, we've just seen a 16% year-on-year increase in earnings for S&P 500 companies for Q4. That's a 60% that have reported so far. Of course, they've also spoken of tariffs. About half of them have spoken of tariffs, but not a quantitative number. So stay invested in the U.S. We still like tech. Yes, there are concerns around, how much spend is happening. We still like healthcare, and of course, financials remain positive for us, even though we are seeing possibly, rates coming down. Though at this point, I would say after January, rates haven't really caused that much distress.
Yeah, and yet, with all of that you describe, U.S. markets for the first month of the year have actually underperformed European markets. They've also underperformed Chinese equities as well. Chinese tech stocks have had a really strong start, especially since the advent of DeepSeek. Do you think that it's a bit of a dead cat bounce as far as those other indices are concerned, or could we continue to see this outperformance coming from overseas markets?
I think we're going to continue to see this outperformance. There was a little bit of worry around the currency. Dollar seems to be holding steady more recently. Now, China tech is finally having a comeback after 10 years of underperforming U.S. tech. So this year we've got China tech up 9%, 15% from mid-December. Again, DeepSeek has been one of the factors leading to the rise of the China tech stocks, opening out the fact that whether it's Alibaba or Baidu or Tencent, they also have AI models that are going to come into place. There are also tie-ups happening between Apple and Alibaba. So you're going to see a shift in the AI in the tech space in terms of what's going to work. We already heard Elon Musk talking about the fact that there is some amount of data that gets fed into models which is not accurate. Now, that's also what's going to happen with China and U.S. tech companies. I would stay invested in U.S. tech. I would definitely be adding to China tech also, maybe on a broader, scale, rather than, just picking up individual companies. I would also look at China EV makers at this point. So it's interesting. The China story is interesting. We are neutral. That also means that we are fully invested in China, and I think we're going to keep it like that for the time being.
Yeah, interesting. Always good to chat to you. Anita Krishna Gupta, equity strategist at Emirates NBD. Thanks so much for joining us. Now, severe drought and crippling debt means Zimbabwe is struggling to feed its population. The African nation has failed to repay over $20 billion in debt over the last 25 years. Joining us now is Bloomberg's Ray Ndlovu from Zimbabwe's second largest city, Bulawayo. So talk to us about the financial backdrop, the economic woes that Zimbabwe is experiencing, and how it's directly affecting the population.
Thank you, Jumana. So the drought basically hit Zimbabwe and several southern African nations last year. And out of these countries, Zimbabwe was the most affected during that drought. And Zimbabwe's case really is that it's been in default for the last 25 years. So this has made it very difficult, almost impossible, in fact, for the country to be able to access any extra financing from institutions like the IMF, the World Bank, and the Paris Club, because of, like you rightfully pointed out, a debt which is at about $21 billion as of at the end of last year. So that has really complicated any, ability for the country to get any, financing in terms of support to feed the population. In contrast, a country like Zambia, Zimbabwe's neighbor, has received about $1 billion jointly from the IMF and the World Bank. So that issue of the arrears really is weighing quite incredibly on the country's ability to access any resources at this point.
Yeah. Is there anything that the government is trying to do to alleviate the impact of the drought and obviously the ongoing domino effect of the financial situation because the country is so much arrears?
Yeah, so one of the things that the government has been doing has been to take out a sovereign insurance that's in the event of a severe drought and a weather catastrophe. They're paid out in insurance by a regional body. So last year they received about $32 million. That was the highest in a group of countries that includes Zambia, Malawi, and several others. So basically that's been one of the tactics that they've been using in terms of signing up for insurance and hopefully receiving a large payout. They've been using those funds then to give cash transfers and also to feed people in terms of buying the staple corn to feed the most affected parts of the country. So that's really been what they've relied on. What the finance minister has indicated is that they may then, try to continue with this program and seek even domestic resources and mobilize the private sector to come in as well and help to feed the population.
Very clear. Bloomberg's Ray and Lovo, thank you so much for bringing us the report on Zimbabwe. Now, a look at markets once more. Just to recap, some of the major drivers for sentiment over the last 24 hours. It was, on one hand, we had hotter than expected U.S. CPI numbers pushing to levels not seen since August 2023 of a couple of years ago, since we had a core figure that high. And on the back of that, we saw Wall Street end slightly in the red. The S&P was down about 0.3%. But this morning, all of the futures are pointing to the green. And look at European stock futures up almost 1%. You've got to wonder whether that is on back of the geopolitical developments, which is that President Trump has had a call with President Putin, and now the market is pricing in the possibility of a resolution to the war that has been going on for 3 years now. So that's the picture for Euro stocks futures. We also saw a very big move in fixed income yesterday. 10-year yields ending up the session 9 basis points higher. That is the biggest move we've seen for the year. So 10-year yields at 4.60. But that was it for Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.